Good morning, traders. It's Thursday, February 27th. Quick reminder, we have a live mentoring session today at 12 noon Eastern time, so we can go through the charts and markets and questions there. Be sure to join in. If you can't make it, don't worry. It is recorded. You can listen or watch it over the weekend. Anyways, let's take a look at the markets. This morning, we are seeing the equities markets trade a little bit higher. We got a little bit of a bump with, I think, NVIDIA doing a little bit of lifting. They did have half decent numbers. They're growing. They grew 78%, I think it was. But overall, their profit margins are down a little bit because they are putting out some new heavy-duty chips, which cost a ton of money to do research and tool up for. But overall, the market's having a little bit of a bounce. Again, it has had a pretty big sell-off over the last several sessions, so this feels like it's kind of a knee-jerk reaction bounce, kind of an oversold reaction bounce, and we'll see how things go. Overall, the market, when we look at our 30-minute chart here, it went into an oversold lime green territory. If there is too much oversold and too much selling volume and panic, it can change the trend, and that's what has happened. Short bouts of this are very bullish. When they extend and continue to push down with lots of heavy volume, which we can see on the daily chart, strong volume, it can change the tide, change the trend. And so now the market is orange and neutral, and we do not want to be holding stocks because the bottom could fall out and we could see a very big drop in equities. If we were to just look at this most recent drop from the high on the SP 500 to the low, about a 4% drop. So we could see another 4% drop to the downside, which would break the lows from January and come back down to the lows from last October, or November, October. And we could see a big bout to the downside once this unfolds. But we could see a bounce up, a bearish flag, as it drifts up into resistance. The type of price action we have here is somewhat similar to this, where it can bounce up and have a strong knee-jerk reaction and continue to chop and consolidate and pull back in a deeper way. So we just need to see how this market is going to react. But more or less, the market, as we talked about yesterday in the last couple trading sessions, it has traded sideways with lots of volatility for several months, and that really kills the uptrend. We really do need to see it continue to go higher, not trade sideways with lots of volatility. If we look at the NASDAQ, it's very similar. It has traded sideways. It didn't make new all-time highs. Simply the large techs are struggling a lot more than they have been in the past. And of course, when something goes up and it trades sideways long enough, it loses its momentum. And now we need to figure out, is this in the market here? Is this a top, or is it a pause before going higher? So if this is a top, we're going to see eventually a big break to the downside. If this is a pause and it gets some stability, we could kick into another uptrend and see another lag higher. So we'll just have to see. Cycle analysis does point to higher pricing over the next a month or so. But obviously we have, as I showed yesterday, we have multiple short-term cycles pulling down, and that the market is pulling down temporarily here down to a support level. So we'll see if it gets traction and stabilizes, and if the momentum and the strength comes back or not. If we take a look over at where money's flowing today, so it is flowing into stocks. Bonds are down a little bit, so bonds are coming back to kind of how they have traded in the past, where if the stock market goes up, bonds are typically flat or down. If the stock market is up, like today, we see bonds go down a little bit. So I feel like, and we've seen this a few times, not very often, but we're starting to see it more often, where bonds are moving kind of the opposite as the equities market, which is nice to see. It'll be nice when bonds, I think, there is, some risk with U.S. bonds with everything going on, but in the grand scheme of things, I do think they're going to slowly work themselves back to move how they used to move and provide more opportunity. So when we get out of stocks like right now, we could be moving into the bond market, and the bond market could continue to move higher or hold its value and just slowly grind up while the stock market chops sideways or pulls back. If we take a look at, let's take a look over at precious metals here and the dollar. So if we take a look at the dollar's up a little bit again today. Really, overall, it's had a very controlled pullback. We talked about this yesterday. Nice big rally to the upside. Now it's just kind of flagging down and taking a bit of a breather. Trump and tariffs definitely caused some kind of upheaval and roar and nervousness in the market, which definitely chopped things around, some big pops and drops. But overall, this is still primed and set, I think, for a longer term picture to eventually move higher. If we take a look at gold, it's down 1.1% this morning, so a pretty good pullback in gold. That could be telling us that the stock market is at support, meaning people might want to move into into stocks and out of gold. So they're moving away from this defensive play. So we'll see how this goes. There's definitely a lot of mixed signals in the market. Gold is now at the 20-day moving average. If we take a look at the 30-minute chart, it did dip into oversold territory a couple times in the past 2 trading sessions, and it's bounced back up. It is going to be back down at 1896. So we're right back down to these lows, right back down to this 20-day moving average. So it's going to dip right back down into an oversold territory. So we'll see how that plays out overall. But again, the markets have potential for that one more push higher. I know we have closed our positions, and that's because this market could go, it's a 50-50 coin toss. And we know the markets fall a lot faster than they rise. Typically, stocks fall 7 times faster than they rise. So if they're trendless, we really don't want to be holding them, because if they do drop, you get hit real hard, really fast. And that's not what we want to do. We want to step aside, let the market firm up, prove that it's wanting to go higher, and then jump on board and ride that next trend. So if we do take a look at the overall CGS and ACS strategy here, you can see the signals. So obviously we have an exit signal here. We have multiple signals where we get in, we will have a losing trade, the market stabilizes, and then we can get into some nice big trades. Market will reset and stabilize. We can get into some trades. Sometimes, again, another type of losing trade. This one here is another small losing trade. We are getting closer into, I think, a major topping phase. I feel like we are very, very close. If we're not there already, I think we're only like a month or 2 away from the stock market putting in a major top. But taking losses and getting chopped around, I mean, there's some amazing comments from some subscribers from yesterday morning's update and afternoon update and position updates. There's a lot of new members who don't fully understand and grasp the value and how things work in this newsletter, how this investing strategy works. A lot of people see it as a newsletter, and they're typically used to a trading service where you demand lots of trades and you expect things to work out. And that is not the proper expectations. This is an investing strategy. It does take 6, 8, 9 months generally to start to see things really perform, depending on when and how you get in. The majority of people will join right after a strong winning streak, and then the market goes into several months of small gains, or a few trades could be back to back where they're small losers. And that's just the sentiment that people will move in at the worst time. And then, of course, we're seeing this right now. People get nervous, they give up on things, and they get out of a strategy just before it comes into favor again. And literally, people join and switch gears, switch strategies at the worst time, right when one has had a good streak and is about to go into an unfavorable time or a time where it's going to struggle. They move into that. And then just when they finally give up on something, like, well, it's not working, they move out of it. It'll work again. And I have seen this since 2001. I've been doing newsletters, and it is like a signature move. When people give up on something, it's just, or when they join, they usually join at like the worst time and they leave at the worst time, and they always miss. And a lot of people will jump strategy to strategy, newsletter to newsletter. It is crazy how the markets pull your strings and get you second guessing and giving up on things. And I know a lot of members who've been with us for years finally get it, understand it, and see the way. It is a game changer when you understand and see the markets from my view, and how we navigate these markets, and how these pullbacks and small losses, they're part of the game. They could be a lot worse. If you're fully invested in individual stocks, you'd be taking huge losses compared to a small, 2.5-3% loss on, about half of our portfolio, which ends up being a very small loss percentage-wise versus those who are swinging for the fences in trades and fully invested during these choppy, difficult times. Anyway, let's see what else we got here. Let's take a look at the hot list real quick. GDX continues to be at the top of the list. Obviously, it has had a very strong run. It's pulling back. It found some safety yesterday. Money was flowing into it. Healthcare is in an accumulation phase. It looks like it's put in what looks to be a nice kind of bottoming formation. It's now kind of built a bottom. You could argue a few different plays here that this could be a neckline. Oops, if I grab a tool. This could be an inverse head and shoulders. And we've got a shoulder, we've got a head, we've got a shoulder. And it looks like it might, you can also see this as a bull flag pattern, and it's starting to break out. So we're seeing money move into the healthcare sector. It looks like it's building a bottom. It's not fully in a bullish trend just yet. It's still in accumulation. But overall, look at the hot list. Almost everything is risk off, meaning people don't want to put their money really anywhere. They're not piling in hand over fist saying this is the place to be. The only one that actually has risk on right now is utilities. And again, it's not really the sexiest looking chart. It's been moving up and holding its value while the stock market falls, but it's still not, a super strong play. The majority of short-term trends are down, and the majority of longer-term stage analysis are bearish and orange and down. So this is telling us the market is pretty weak at this point, and we're going to need to see a lot of things change for this new uptrend to kick into gear and move higher. What else do we have here? Let's take a look over at crude oil. It's up 1% this morning. Again, in the grand scheme of things, it just keeps fading and fizzling down. Let me just zoom out a bit. We had a few bouts of news here that drove oil higher. There was a ton of people short, betting on a breakdown in oil, which I was hoping was going to happen. I think it still is. It's just a matter of time. But the market did what it does best, and majority of people were betting on the downside. And the market ran up. It broke a bunch of these highs through here, broke this high, running the stops, meaning all the shorts just can't take the pain. They're proven wrong, and they have to get out, which is the right thing to do. And then, of course, now it comes right back down to those levels. That's you got to protect yourself, but the market is great at shaking people up and getting them out of plays. And now maybe it's going to want to break down over the next month or two in this market. If we take a look over at consumer staples, we talked about consumer staples a little while ago. I mentioned how they had this bull flag pattern right here, this nice rally up, and then they started to break out right here. We talked about in the update how it looked like a nice signal. It's had a really nice pop and move. Consumer staples are seen as a defensive play. Now, when we're in a bear market, all of these collapse. But during small waves where there's a bout of selling, sometimes there's going to be utilities, healthcare, consumer staples can move higher short term. And that's what we've seen. But now we've seen this sector definitely run into resistance. We have this high right here. We have this high over here. So it is poked into resistance, and then it took some selling there yesterday, kind of wiped out. If we were to just look at this from a Fibonacci standpoint, we have the low, and we have the high, and we have this low. We carry that forward. Just pull this back down to the bottom here. You can see we came all the way up 618, chopped around for a couple days, and then boom, hit the 100%, had a blow off move, running the stops, breaking these highs, and then had a reverse down. So overall, that I know some of you traded XLP when we talked about it right here, saying it's breaking out. It looks like it has upside to 82.55. I know some of you or a bunch of you traded it. To me, that trade is now done. That was a quick momentum play. It really blasted up. It blew through that 100% move kind of as a blow off phase, and now it's done. So if you are still in it, it might be something you might want to, if you didn't lock in gains along the way, definitely want to think about trimming profits or potentially moving aside, doing something there. Other than that, I think that's about it for this morning. We'll see how the rest of the market unfolds. Let's just take a look. Let's take a look at the Magnificent 7 ETF here, get a feel for what they're doing. It is trading a little bit higher this morning. In the grand scheme of things, NVIDIA, I don't think I showed this yet. NVIDIA's up a little bit this morning. Nothing too significant. Let's just look at the 10-minute chart. NVIDIA is trading up, given the news. I think it closed right here. So NVIDIA is only up 1.5%, and that's because it's kind of got mixed data. They're growing, yes, but their profit margins are down, which investors don't want to see. They want to see it go the other way. They want to see bigger profit margins. So overall, for NVIDIA, this is a pretty flat day, given the news. And we'll see how this plays out. Overall, in the grand scheme of things, when we look at the Magnificent 7 as a basket, it doesn't look the greatest. This could be a washout and shakeout. Maybe we're going to have a push back up into back into resistance through the middle of all this noise. Maybe it's going to want to push up to put in a double top. If this happens, we're going to see that run, that one push higher in the stock market, I think, where the SP 500 and NASDAQ hit some new all-time highs and go higher. We'll just have to see how this goes. But overall, this is definitely not looking the greatest. Not a huge fan of the high volume selling. And you can see here, we had this with the bots ETF. Look at the volume. So we had volume, and then it's slowly been creeping up. And really, we had the biggest amount of volume really at this whole topping phase. This is typically how it works. We tend to see when there's an ETF made for something, and then suddenly the volume goes nuts. Usually that's a sign the masses have finally found an easy way to play the Magnificent Seven, and usually that trend is over. I think the other ETF, BOT bots, I think was one of the other ones here. And if we zoom way out, let's just zoom way out here. Where was it? I think it was, I can't remember, maybe it wasn't this ETF. This was maybe it. I can't remember where it was, but we saw a huge pop in volume. Oh yeah, it was right over here. We saw this big pop in volume, and we added it to the hot list. A lot of members wanted to get into this, and then of course it went to a huge correction. It has moved up since then. If we just kind of zoom out and go back, it has moved up, but overall it's been definitely a rough ride. And when we see lots of volume go into it, that usually means it's a crowded play, and it's really anything above this level when the masses pile in and the big volume surge is icing on the cake. Just be aware it's usually going to be close to a much larger correction, a major multi-year top. Anyways, that's it for now. We'll talk to you soon. Take care. Bye-bye.